Hello, NAAIA community. Get ready to relive insightful discussions, gain fresh perspectives, and be inspired by the wealth of knowledge our community has to offer. Let's dive into another episode.
So, I would like to welcome you guys to the webinar today, and it's called When the Cavalry Isn't Coming, and we're talking about some changes in disaster relief. It is an honor to be here, especially working with our NAAIA family to bring this new and ever-changing information. Kind of what we'll be discussing today, and we had an opportunity to discuss it in our past meetings. We are discussing what the changes in FEMA are. We will be discussing the different type of policies that you'll need to have available. We'll discuss looking into reading your deck pages. Just there'll be so many things that we'll have an opportunity to kind of reveal today to discuss the different changes, because what we know is nobody is coming to save us. We have to make sure that we're consistently advocating for ourselves. We have to make sure that we're consistently finding ways to kind of be with the ever-changing times. So while we're waiting for our different panelists to come on, we have our three: Jason Rodriguez, Elaine Jones, and then we'll have Cynthia. So what I'll do is, Elaine, will you do us the honor of kind of introducing yourself, your name, what agency you're with, where you're located, your years in the industry, and what you look forward to in today's discussion.
Certainly. Thank you, Wendell. My name is Elaine Jones. I'm the owner of Atlanta Premier Insurance Agency located in Marietta, Georgia. I have been an agent. I actually had to do the math this morning. I've been an agent for 30 years. And what I look forward to is to talk about some of the shifting changes that are going on and how that affects our clients.
I definitely appreciate that, Elaine. Thank you so much. Jason, same thing, name, maybe who you're working with, where you're located, and your years in the industry, and what you look forward to in today's discussion.
First, I want to thank the entire NAAIA organization for allowing me this opportunity to be a part of today's important discussion. My name is Jason Rodriguez, and I'm the managing partner of Prominent Insurance Services based in Wilmington, Delaware. I have been in the industry for 15 years, and I hold both the CIC and CPRM designations. And what I look forward to today is helping people shift their mindset about insurance. It's not something you just buy because the law says you have to. It's how you protect your wealth, your lifestyle, and your future. Thank you again. I'm honored to be part of this important discussion.
I appreciate that as well, Jason. And last but not least, we're going to introduce Cynthia Dansby. So Cynthia, name, who you're working with, where you're located, years in the industry, and what you look forward to in today's discussion.
Sure. Good morning, everyone. I am Cynthia Dansby here in Colorado. I am an independent insurance broker advisor. I've been in the insurance industry over 40 years. I've been an independent broker for over 11 years. I look forward to providing some tools that I use to work with my clients pre-loss, notification information that they should need, and how to navigate these interesting times in the insurance industry.
I appreciate you, Cynthia. Thank you. So what we're going to do next is we're going to get straight into a few questions. And if you do have any questions, I know it was mentioned before, please put them in the Q&A so I can make sure I'm going through them and looking through them, and we can answer them live. So our first question, Jason, during this time of uncertainty with a hard market, why is it important to have a trusted insurance advisor?
Thank you for that question. Hey, Echo, I'm clear?
You should be. I think if our other panelists can pause your mics or mute your mics, you'll be able to answer your question.
No worries. I just want to make sure I'm here, I'm heard properly. So I think more now than ever in this hard market with rising premiums, shrinking federal aid, and more frequent disasters, we're seeing companies pull out of zip codes. Policies are getting more restrictive, rates are climbing, and people are just frustrated. But here's the truth. The difference between the cavalry coming and the cavalry not coming is one thing, and that's your insurance advisor. The right advisor is the real cavalry. And when things go wrong, they're the ones who show up with a binder and a check. And there is very little that a properly constructed insurance policy won't cover. But remember, not all insurance companies are created equal. What one company excludes, another may cover. And this is why choosing the right advisor is absolutely critical. And we understand, we must remember, FEMA assistance is not a substitute for insurance. It's designed to help people survive, not to make them whole again. Just like Social Security isn't meant to replace your full income, it's supplemental. It's income supplemented after you retire. So that's why you need someone who is not just quoting you a price, but building you a plan to protect your now and your future.
That was really good, Jason. I definitely appreciate that. It is important to have a trusted insurance advisor. I have to be able to make sure that I can go to you for anything, regardless of what it is. And I know that you're going to be truthful and honest with me. And it's not just you getting premium, it's you making sure that we have a built consistent trust with each other. So I definitely appreciate that.
Thank you.
Our next question, Elaine, can you tell the insureds the importance of reviewing their declarations page and why being transparent with your insureds is important, especially when they're shopping their insurance? Oh, you're on mute, Elaine.
Okay. All
There
right.
we go.
I was saying that I think some of our answers are kind of going to piggyback off of each other. So part of insurance and your deck page obviously is a trusted advisor, but deck pages are important because they show the coverages that you have. It's very important that you review those coverages because things are constantly changing. The deck page shows the coverage that you have. The coverage of the deck page also shows the gap in coverages. Some people think that the homeowner's insurance is encompassing of all things, which it does cover the structure as well as the personal property. But a homeowner's policy also has areas that have limitations on there, such as maybe artwork, such as, you know, now a lot of people work from home, making sure that that's covered. Artwork, things of that nature. So reviewing your deck page is very important because it also not only informs you of what you do have, but it may also inform you of what you don't have. And that's a discussion that you have to have with your agent. And we also want to make sure that based off of the policy that you have, that a client feels comfortable with what they have, they feel informed, and they feel cared for. So we always want to do an annual review to just see if there are any changes in the policy. We also want to look at, you know, is there a carrier that has better coverages? And the only way that we can do that is by having a review. So going over that deck page is very, very important. And it is something that should be done on an annual basis.
No, you're absolutely right. And so my biggest thing is that I have not been in the insurance industry for very long. And I didn't really understand it. I didn't really know what to look for, didn't know what questions to ask. I always knew basically I just had a bad experience with insurance because it was just too expensive. But I'll tell you a story. My truck was stolen in Houston, Texas. And this will go back to Jason as well. My truck was stolen in Houston, Texas. I had literally everything that I owned inside of it. Every single thing that I owned inside of it. My wife's purse, you know, to that extent. But I had a trusted insurance advisor that I went back to, and she said, "Hey, we're going to get this taken care of. You know, you have a rental car agreement, you have, you know, everything that will be inside, it can be replaced because of your renter's insurance." But she went into in depth. And then from that point forward, even before I got into the insurance industry, I started reading every single thing that I had available to me. So, no, absolutely. I definitely appreciate your answer, Elaine. Next question. So, Cynthia, when we had our meeting yesterday, one thing that I had taken away from it, so Precious had mentioned it, that risk management is the tightrope and insurance is the safety net below. How can we ensure that we are educating the insureds on learning to walk that tightrope more diligently without necessarily being fully dependent on the safety net below? Oh, Cynthia, you're muted as well.
You hear me? Okay.
Yes,
great.
ma'am.
Great. So yes, having a few conversations with Precious, at some of our conventions, speaking about how do we keep our clients informed, our insureds aware of how to handle claims. As you may know, we just had a tornado here in Colorado, not too far from my home. I've received several emails with insureds discussing that they've got folks knocking on their door wanting to help. How can I inspect your roof, your windows, your sidings? We have to be aware. So I am writing back, letting them know, please don't take in any of these suggestions and folks that are knocking on your door for inspections. Let's talk about your claim, what are your damages, call a reputable contractor to come in and inspect any damages you may have. But as an advisor, you want to let them know you're there before claims are reported. This information should be given to them when you're selling the policy to them, discussing at their insurance review what has happened or what could happen to them, making sure they understand those deductibles. The deductibles are no longer flat in a lot of instances. Oftentimes they are a percentage of the coverage A. They need to be aware of that. I am suggesting that my insurance set aside some funds, emergency funds for insurance, aside from, the standard insurance or, the standard savings you may have, because it's going to come up here, especially in Colorado. So it's just keeping your clients aware that you're there to help them before they make the claim. I think that's so important. Oftentimes the claim may be under your deductible. You don't want to present a claim and then decide that you're not going to have any coverage. You will always have that claim on your record, even if it's a zero claim. So educating our insureds on how the claim process works, what happens after you present a claim, and how that looks on your future insurance record, your history. So being a place they can come to, being available to answer questions, and letting them know that you are, just not an insurance broker and sold them a policy, but you'd like to advise them also.
Thank you, Cynthia. I appreciate that. Elaine, could you maybe speak to that as well? Teaching our insurers to kind of walk that tightrope instead of depending on that safety net.
So I've been in the industry, as well as Ms. Cynthia has been in the industry long enough to know that when I started out in insurance, people came into the office, there was a wet signature, and when there was a claim, they came in or they called you. When they started introducing the 1-800 number, what has happened is that people have bypassed us altogether. With some carriers, they bypassed us altogether, and then they turn in those claims. And then we find out when something kind of pops on our computer screen, letting us know such and such has filed a claim. So what has happened as a result of that is because they bypassed us, we haven't had the opportunity to let them know how that claim impacts them. Once it's there, it's there. We also, because we don't get that opportunity, we haven't even had the chance to reinforce about deductibles. Deductibles come into play for any claim, as we very well know. And there are times that as an agent that we need to just talk about that. We need to talk about, is the bike that was stolen on the porch, is that necessary to turn into your insurance company? We are not devaluing your son's or your daughter's value. We know that it is very important and that he wants to ride his bike. However, in the long term and seeing where we are in our climate right now with FEMA, that Cavalry is not coming. We want to make intelligent decisions, informed decisions about when we turn in claims and when we don't. Again, we're not telling you not to do that. We are just looking at the long game. We want to make sure that you're able to have your policy, that you don't turn in a claim, a small claim, and then they cancel you, which they will do. So we want to have that opportunity to talk with our customers. So we want to tell our customers when we sell a homeowner's policy, when you have a claim, call me. Don't bypass me. I am a very important part in this process. The person that you turn that claim into, they're data entry. They're just sitting there typing. But I am your trusted advisor, and we can talk this out together. I want your insurance to be there for when you really need
it. Elaine, I appreciate that. Jason, can we have your take on this as well?
Yes, and I agree. And they were just giving me a lot of thoughts. And with our onboarding, welcoming clients packages, we put in there because, like they was alluding to, they don't understand the claims process, and they don't understand that we're in a hard market. They put like they don't know what to put on claims and what not to. And I say insurance is there to make sure that you protect it. If it's going to cause you a hardship, if a claim is going to cause you a hardship, so I encourage people in my clientele in our, what is it worth it to put in the claim? Give them high deductibles, $2,500 or more. Because if you notice in this homeowner market, if you have 2 or more claims in the last 3 years, they're going to non-renew you, and it's going to be real difficult for you to find admitted homeowner policy. You may have to go to the surplus E&S surplus market. So I encourage people and let them know, because people don't know. They think you put in, as she talked about, putting in claims for bikes, putting in claims for pocketbooks. I had somebody putting in claim for $1,000 and the deductible was $1,000 because they don't know. They're not educated, and they don't know that these carriers, especially on the homeowner side, they're dealing with frequency. Frequency is more important than severity in these cases, because they're like, hey, the frequency of the claims can cause more to a home insurance company's bottom line than the severity is. You may have those one-off severities, but the frequency. So I encourage my clients, and I put into, their new onboarding packages, documents of, is it worth it to file a claim? Because they don't know these things. They're not educated. So, and letting them know about how insurance companies see when you file these claims. If you got to put in a $10,000 claim, that's what you suppose. That's what insurance is there for you. But if it's $2,500 and you have that, pay that, self-insure that. And this is where, you be more careful with things as well.
Thank you, Jason. Guys, remember that you can drop any questions that you may have in the Q&A box. Whatever questions that you have, we're definitely open to hearing them. But yeah, whatever you guys want to ask, I promise you. I was a teacher, so no question is a stupid question, I promise. So I know we also had a discussion about this, and I want to make sure that I aim this at all 3 of the panelists, and I want to start with you, Elaine. I know there are a lot of people getting non-renewed, especially with carrier appetite changes. And like Jason just mentioned, a lot of people are starting to go to the E&S space. So renewals, I know there's a lot of people that live off renewals. Is there a benefit, or what is the benefit of checking on your expiring renewals that may be coming up in the next couple months? Could you maybe expound on that?
Yeah, there may be a carrier that, everybody, first of all, is looking for price. We know we don't sell on just price, but we do want to shop to see if we can have them a cheaper price. Renewal, we may be able to add some ancillary coverages that they don't normally have. Like, they do service line, equipment breakdown. When I started in insurance, that was unheard of. So shopping around to make sure that we not only get the best coverages for them, but the value. And each carrier has a different algorithm as to how they come up with replacement costs. We may be able to shop them with a different carrier, get a better replacement cost, and save them money. Or we may be able to get a better replacement cost for the same amount or a few dollars. The price of the premium alone should not be the guiding factor. The guiding factor should be the coverages that you have. As I mentioned to you earlier, and another thing, when it comes to renewals, we may want to look at a company that has we may want to keep you with the company. I'm sorry, that's what I was getting ready to say. Sometimes shopping around is not the best thing. Building a relationship with the current carrier is sometimes the best thing to do. So there are several factors that we look at when it comes to a person's renewal, and price is not just the reason. The coverages should always be the primary reason. What is best for the client, and an opportunity to talk about deductibles. I don't think anyone probably sell deductibles at $500 or $1,000 anymore. The average deductible now is $2,500. I remember when they were $500. I even remember when they shifted to $1,000, but $2,500, and explain to them why we're doing $2,500, even if we keep them with the same company. That may be a better option. So renewal, there are multiple factors to look at when it comes to whether we switch or if you remain with the same company. There is just no one answer. And again, premium alone is not our primary guiding factor.
Thank you, Elaine. I appreciate that. Cynthia, same question. What is the benefit of checking on your expiring renewals?
Well, you, again, may have the opportunity to offer a better value. I no longer use the word cheaper, less expensive. We're in a climate right now, you need the best value for your dollars. We're in a climate here in Colorado where 1% wind hail deductible is the norm. If you have a flat deductible for wind and hail at renewal, I suggest to my clients that may be a better value for you, depending on where you are with your emergency savings. If you feel that you want to go to a 1%, some insureds have chosen 2% of their coverage A for their wind hail deductible here in Colorado and a couple other states that I represent. But at the same time, you want the best value for your dollar. So perhaps going to a 1% might not be the right thing for you. Stay where you are at the $2,500 flat deductible and perhaps pay a couple $100 more a year. So that's your opportunity at renewal to let them know they have a very good value. Yes, the rate has gone up, but at the same note, you may not be in a position to save an extra $5,000 that year in case a loss were to come up. We do encourage them to take an opportunity to sit down and look at how much they can save each month, if it's worth it for them to go to that higher deductible, or if they should stay where they are. Renewals are the best opportunity to offer values, and some of the coverages we can add to these, your renewal would be something that may only cost $20 to $30 a year, give them a little better value, and then again, they don't really mind paying that extra premium. So again, renewal is a perfect time to let them know what value they have, or again, perhaps it is time to look for another carrier at that time. But in this particular climate, I have found that shopping for insurance for a cheaper premium is not the best use of your time or theirs.
Absolutely. Absolutely. Jason?
So we understand insurance is not a set and forget it tool. It's a living protection that helps you grow with your life. So life doesn't stand still, so neither do your insurance coverages. So on renewals, you want to check, see if anything changed in their lives. I still hear that echo. If anything changed in their lives, see if you got in a certain situation when you advise them, they may not have been in a position at that particular time to get a flood policy or to get an additional line of coverage because they didn't have the money. Their life may change. They may have got a better job, may have got a better opportunity. They can afford these things right now. So you constantly building on their protection plan so you can make them whole over time. I never had one client yet, but I do have a few, but that got all of it, meaning the home, the umbrella, the life insurance policy, the flood policy, the 2 car, we get those, but these, you normally build those renewals with your clients over a long period of time. And we understand in this environment, there's thousands of independent companies. There's thousands of insurance companies, but I always tell my clients, all insurance companies are not created equal. You got to look at the policy language. Some have proprietary forms, and you don't want to switch over because you got a 20% increase with your particular, because they've been hammering clients with 20%, 15% increases, but that particular company, their underwriting and their claim service is second to none. They look for ways to say yes instead of saying no. So I'm not going to switch my client because he got a 20% increase with a company that's going to say yes in the event of a claim to a company that want to look for every exclusion in the policy to save 30%. And at the end of the day, I hate having those conversations because I had a few of them in my 15 years where you say, hey, this is not covered because you didn't want this, or this particular company denied the claim. Those are the terrible situations. So I like to be in a situation where say, okay, that's covered. I feel good. That's that they're going to come and respond to you. So that's very important when you're looking at renewals. Us as advisors is understand the policy language. Look at who's on a claim team. That's why we only have a handful of companies that's best in claim service, blessed in company overall clients, and they got a great culture, and you have conversations with them so you could develop relationships. So you can, if there is a problem, they may make an exception for you, for your client. You may be able to make that phone call and say, hey, can you do me a favor? I know this is a little gray area. Can you make it clear and cover this? It's a great client of mine. We've been doing businesses to help us and help, the client as well. So these are the things you got to know in the renewal process. It's like the other moderators was just saying, it's not always about price. You want to know about coverages and understanding the policy forms and languages, because that's important.
Now, this is some really, really good information, Jason. We got a couple questions in the chat, so I'll direct this at everyone as well. Jason, I'll start with you. With FEMA changes, what are the options to fill the gaps left open?
And that's what we discussed about. We're the Cavalry. The insurance advisors is the Cavalry.
Yeah.
We're the Cavalry. We understand that the government, we know this, being an African organization, African American organization, the government never comes to save us. So we always got to prepare not to be saved by them. So what you need to do is have your advisor that protects, because there's, like I said, there's very little that an insurance policy will not protect. And then if you look at FEMA, they got budget, they got thresholds. It's restricted just like insurance. Like for a household, I think you only get $42,500 per household. And for critical needs assistance, they only giving out $750. That's why when Vice President Kamala Harris gave out that $750, they was like, that's all she could do. It's regulated. So they was looking at her like she was doing a misservice, but she gave you the max of what she was able to get in a regulated industry like our industry is. So you have to sit down, and we don't like having the questions with insurance companies, because when you have the questions with an insurance company, how it goes, you ask them a question and they say, hey, it's more money. So I'm not even going to tell my insurance advisor anything because it's going to charge me more. But we have to uncover these by asking them good questions so they can tell us, like, listen, I understand you may be scared, because that's how we train you. When you ask an insurance advisor something, what he does, he sends you a bill. You ask him another situation, he sends you another bill. So you're like, I'm not asking him anything, because if I ask him anything, a bill's gonna come with it. So we have to train them up to be comfortable with asking us questions, and we won't send them a bill. We just want to inform them. So FEMA is a program to, like I said, not to make us whole, but just to make us survive. So we really shouldn't be looking for that for to make us whole again. If it comes, it's a blessing.
That was really, really good, Jason. Elaine, what are some options to fill the gaps left open from FEMA changes? You're muted, Elaine.
Okay. Some of the things that we should be doing, and renewal time is a time to do this, is be proactive. So what are the things as a homeowner that you can be doing? So you know if your hot water heater needs to be replaced, go ahead and do those things. You know, if your roof needs to be repaired, if you got some plumbing, some wire. So one of the things that we need to do is be proactive as homeowners. Be accountable and responsible for some things that we need to take care of to not have a claim down the road. That's one thing that we need to do. The second thing that we need to do, which is what Jason said, is we need to have the conversations, because we don't want to tell you that it's not covered. But the only way that we know to say whether it's covered or not covered is to have the conversation. We don't know what we don't know. We don't know about your home. You know, we do ask the questions, you know, how old is your home? Most times homeowners, they don't know, but we do ask those questions, but we don't know what we don't know. So without us knowing, we don't know how to guide you. And then once we do know, because we have established that we are trusted advisors now, is that we know how to pivot from the homeowner's policy to other policies that may fill the gap, or additional endorsements and or coverages that we can add to the homeowner's policy. But we also, as I mentioned, number one thing is we have to play a role in making sure or offsetting a future claim by taking care of our property ourselves before something happens. We don't want something to happen, then we talk about it. We want to have a conversation before something happens. So being proactive.
Thank you, Elaine. I really appreciate it. Cynthia.
Well, again, we go back to being prepared. I really encourage my insureds to understand that in the event of a loss, FEMA will not be the first person you see. You will see these contractors. You will see folks that are hopefully in the community trying to help you. Hopefully you can get a hold of your insurance agent, but being prepared, knowing what your steps would be in the event of a loss. Where will I go? What will I do? Will I be able to access funds that I need in an emergency setting? Have your insurance information available, perhaps on your phone. I am encouraging my insureds to download apps so that they can stay aware of what their insurance company is doing in their area. A lot of times the information will come across that app. Hopefully you will get a text. Here in Colorado, we had a very unfortunate incident where the notifications did not go out to the homeowners in that area. Those persons that were responsible for getting that information out felt that it would not hit that area. Now, I don't understand that, and I know those that have had quite a bit of damage or lost their homes don't understand not having that information. So there are types of weather apps that you can get that will give you some information other than waiting for your town, city, or your county to give you the information. Being prepared, download those weather apps, download emergency apps, download what you need for your community. Being prepared, knowing what you would do in the event of a loss. Have your insurance advisor, myself, I give out a cell number especially for my clients in the event of a loss. Please call me on this number. I'm happy to chat with you. I've had instances where I've been headed somewhere out of town and someone's called me, something major has happened. But know those numbers. Be aware of what can happen. If something major happens, you don't have a home to go to. Where do you go? Who do you call? What do you do? So I encourage just being prepared, having the information you need.
Thank you for that, Cynthia. And Renee, I really appreciate you asking that question with FEMA changes. So we have another question from Sabrina Hillard. So are your states doing any big picture solutions for these issues that you are in favor for, or in favor of, or against, whether it's tort reform, or maybe some carriers of last resort? And Elaine, I will start with you.
I'm not aware of anything that they're doing right now. I know that some of these changes are relatively recent with the new administration in terms of FEMA changes. So I'm not aware of what our state has done, what they're willing to do, or what they're prepared to do. I do know from an insurance point of view what we need to do, but I'm not aware at this time of what changes and or laws towards that our state has done or will be doing.
Okay, thank you, Elaine.
Yeah.
Jason, do you have any big, or sorry, is your state have any big picture solutions for these issues?
Not that I know of, but I am on I'm on the government affairs committee for my state, and some of the things that we do, we're lobbying for is, tort reform, because that's a big thing that increases premiums all aboard, because these lawyers, with these nuclear verdicts and all of these, the lawyers, as you understand, not to knock the lawyers, but some of them get more money than the actual insured in cases. So tort reform was one of them, the 20% business income tax credit that they want to keep for the small business owner. So these are the things that we was advocating in Washington last month at the legislative conference. But those are the main, and then of course, the national flood policy, the NFIP policy, extending it, because every year it comes up for renewal, and we want to have a long-term extension of that flood policy, national flood policy. So that's one of the other things that we've been, advocating for as well. And just to, there was a question that was interesting. What changes have been taking place for and FEMA? So two of the things that's close to me is the FEMA's shift in financial responsibility to states. Instead of paying 75% of disaster recovery, FEMA is now moving to a 50-50 cost share. And as Ms. Precious showed us articles on her LinkedIn, in certain situations, they're not paying at all, leaving the cost to the states, which if you got a small state, which I'm in, it's only 1 million people in my state, that could be devastating to, the state as well, tight budgets. So it's a lot. And then one other thing for, the disabled community, FEMA's ending door-to-door assistance. They have discontinued the traditional practice of going door to door in disaster zones. Survivors are now expected to apply online or visit recovery centers. If you ain't having no internet, how you gonna apply online? And if you can't get out, you have a physical handicap or some type of handicap, how you gonna, visit these recovery centers? So they're making it more difficult for the Cavalry to come and save us. In certain situations, as Miss Precious put up some articles, they're not coming at all. They're saying, hey, fend for yourself. So that's why community is more important than ever before.
But you're exactly right, Jason. You're exactly right. Cynthia, do you know if your states are doing anything big, things that you're in favor for, maybe that you're not in favor for?
Well, we have started our FAIR plan here in Colorado. It launched last month. That's a place of last resort. It is not a less expensive rate. It is not more coverage. It is very minimal, but it is a place of last resort. So we have some insureds that will be non-renewed with losses because of water losses, hailstorm losses, and there will be nowhere for them to go. You'll need 3 denials from standard carriers, and then you can go and apply to the Colorado FAIR plan, which I think at this point it's trial and error to see how it works. It's launched for a month. I've yet to quote anyone there. I have one person I think I'm going to have to approach the FAIR plan for rates for them. It's really not a solution. Again, FEMA is not a solution in between time. I'm asking my insurers to operate as if FEMA may not ever show up. So you need to have a plan in the meantime. But then back to the FAIR plan, I think it is a solution to some of the issues that will come up if you can't get insurance, if you just have to have insurance. Some of my insureds are just simply taking whatever their mortgage company offers, so that doesn't protect their personal belongings. So in those types of situations, we're offering different types of coverages, maybe just for personal belongings and some other types of coverages they may need that are not offered by a mortgage type of forced insurance. So the Colorado Fair Plan will be an interesting tool to use to see how that works out for our folks here. We're looking at minimum premiums of about $10,000. We're looking at a limit of $750 for a dwelling. Here in Colorado, we're approaching the average home somewhere between 4 and 5, and that's still really on the low end. So your average home here in Colorado could be over $600,000 replacement costs. And we're also looking at construction costs that are going up here in Colorado. The rates are a little bit different on insurance for contractors here because of the laws that are in the state. So the Colorado Fair Plan will be a solution if you need insurance, but it will not be a replacement to the normal HO3, HO5 that's available to our homeowners. So that's what we're doing here in Colorado, yet to be seen how it will turn out.
Yeah, a couple more questions popping in the chat. We're gonna go with Dwight Geddes. Make sure I say that name correctly. And that may actually be our final question. Do you think we need to move away from FEMA and towards private insurance for flood and disaster relief, Elaine?
Yes. Yes. Yes, I do. I think we definitely do because of some of the changes in the language that we know that probably will be coming down. So yes, my answer is yes. I think private.
What about you, Jason?
Yes, I like, I mean, I would keep both. I mean, it depends on the client, but I like the private market. Why? Because they know the clients and they offer additional coverages. You know, FEMA only goes up to 250,000. But having houses, as she said, average home in Colorado is 600,000, over 600. So FEMA is only going to, you know, the flood policies is only going to go up to 250. And then a key component of that is that they don't have additional living expenses. So if you have a flood policy and your home gets flooded, you gotta move, you can't remain there, then your homeowner's loss of use ain't gonna cover that. So, and if you don't have additional living expenses, which national flood policies don't, provide, then you're going to be in trouble. That's a big gap because, hotels could be 300-400 a night and it could take months for you to get back right if you don't have a family member that you can be a part of. So I like the private markets. They're getting better. But I would say keep both.
Okay. Cynthia?
Yes, I definitely look in the direction of insurance carriers or some type of gap insurance for the homeowner. Definitely, Jason hit the point that there's some areas that are not going to be covered even if FEMA steps in, even if you have flood insurance, your extra living expenses will bankrupt you if you're out of your home for 2 to 3 years, which has happened here in Colorado just simply because you have to find contractors that will rebuild your home. So I look forward to an industry, the industry's offering some type of gap insurance that will cover expenses for the flood, your additional living expenses, loss of use, perhaps even any other services that you might need in the case or the event of a catastrophic type loss. That could happen. So definitely I look forward to the industry offering some type of gap insurance between your homeowner's insurance, your flood insurance. And we should encourage our insureds, if you live near a body of water and you think that your mortgage company may not require you to have that type of coverage, but if you live near a body of water, you should consider that. Flood insurance is just not forced. You can offer that to your clients, and that could be somewhat of a gap in case of a water loss that's not covered by your normal homeowner policy. But I'm looking forward to something coming down the pipe in place of waiting for FEMA in the hope that FEMA would help. Hopefully communities can do more, but I do see that it will go away and we will have to look at other avenues for resources in the event of those major losses.
Okay. So we are going to go to our final takeaway for our agent audience. So Jason, a final takeaway that you want to leave our agent audience with?
Yeah, so if I could stress just one thing today is that we can't depend on the government to save us. You know, FEMA, federal program assistance, yes, that's helpful when they show up. And when they don't, and when they do, we welcome the support. But if they don't, we still have to survive and we still have to recover. That's why preparation has to be personal. Protection can't be something we think about after the storm. It has to be built into how we live, how we plan, and how we guide our clients. If FEMA Cavalry shows up, that's a blessing. But if it doesn't, we can't afford to be shocked. We need to be ready. We have to build up our own defense. And that's what the right insurance, the right advisor, and the right mindset will provide. But let's even take it further because there's one thing to talk about insurance. Preparation goes beyond the paperwork. When disaster hits, it doesn't wait for paperwork to clear or for the power to come back on. So, we have to take additional extents, building survival kits. And, I have in my home, I have sub-zero sleeping bags because, the grid doesn't care what season it's in. I have a Costco food supply with over 150 emergency meals, canned goods that need no cooking, a solar power generator strong enough to keep my cell phones on and devices running, and of course, bottled water and hygiene supplies ready to go. We insure our homes, but we also need to ensure our survival in these disaster areas or non-disaster areas. Every household needs a survival kit, and every family needs a survival mindset because help may not come at all as we see, and it may not come on time, but that doesn't mean we don't have to be ready in the meantime. So I think, I think to be a part of this. Thank you for having me a part of this thoughtful conversation, and I appreciate the opportunity.
No, thank you, Jason. That was really vital information. Elaine, do you have a final takeaway?
I do. First, want to thank NAAIA for inviting me. I have certainly enjoyed sharing the platform with my colleagues, although we're in respective states. We're doing the same thing. And I think I forgot to mention that I'm in Marietta, Georgia. So some of the takeaways that I would like to share with the audience is agents. For those that are not doing agent reviews, that's something that we need to do. The conversation needs to be had now rather than later about the changes that are coming with FEMA and some of the changes and how you look at your homeowner's policy, how you look at your agent. We want to build relationships with our clients. Something Jason alluded to that I didn't say, but even staying with the same carrier, how you build relationships, even with the claim adjuster. So we want to strengthen our relationships with our customers. We want to help our customers make informed decisions. We want to make sure that our customers are proactive. We want to make sure that our customers know what they have and what they don't have. And we want to bridge the gap with additional policies and or endorsements that we can add to the policies. So those are some of the takeaways.
Cynthia, your final takeaway?
Yes, yes. This is a wonderful platform. I encourage all those that are on this Zoom call to find someone that you can talk to and chat with about these types of situations. I also ask that our agents and brokers be aware of what's going on in your state as far as the laws, the changes, things that may affect your clients very directly, and especially with their home insurance. Auto insurance, some of the things that are happening also can affect them in a time of a flood or a disaster. So awareness, being prepared, agents having knowledge of what's going on in your state, being able to relate that to your clients, letting them know you are taking the opportunities that are there to hear what's going on in your legislation and what your local politicians are doing in your area. So awareness, being prepared, making sure you understand what coverages you have or possibly what coverages you don't have. Where can I fill in the gaps? Speak to your agents. And as agents and brokers, I just ask us to be available as much as we can and to have the answers. And if you don't have the answers, find the answers for your clients. Help them figure out what they should do and to be prepared, to be aware, to ask the questions of their local politicians or who maybe a local charity. What would you do if this happened to us? here in this area. For instance, my folks that are wondering why they got no notice of a tornado that was coming their way. So again, awareness, preparedness, I think speaking with your broker, your agent annually, if they're not calling you, or as an agent or broker, making sure you're chatting with your folks on a regular basis and letting them know what's going on. This is a wonderful platform. Check in with your NAAIA folks in your area, NAAIA National, let them know that you need some help. And ask those questions of our national. How can they help us to be better prepared and aware for our clients? Thank you so much.
No, I thank all you guys for being on here today.
Thank you for watching this flashback episode of NAAIA. We appreciate your time and hope you found the insights valuable. Stay tuned for more enriching content. Until next time, thank you for being a part of the NAAIA community.